Alright, let's dive into what's happening in the markets right now because, honestly, it's a bit of a roller coaster. So, S&P 500 futures are slipping, and the first thing that comes to mind is, why? Well, it turns out traders are keeping a close eye on two big things: the potential deal to open the Strait of Hormuz and the upcoming inflation data. Personally, I think this is where things get really interesting. The Strait of Hormuz is a critical choke point for global oil supply, and any disruption there can send shockwaves through the markets. What many people don't realize is that even the possibility of a deal, or the lack thereof, can move markets just as much as the actual event itself. It's all about expectations and how they shift. Now, here's the kicker: over the weekend, Iran denied being in direct negotiations with the U.S. about opening the strait. This is huge because it directly contradicts earlier optimism, like when Treasury Secretary Scott Bessent hinted that a deal was imminent. But then President Trump chimed in, saying the U.S. was only semi-negotiating and wanted to keep the economic pressure on Iran. If you take a step back and think about it, this kind of mixed messaging is exactly what keeps markets on edge. It's not just about the deal itself, it's about the uncertainty and how traders interpret it. What this really suggests is that geopolitical tensions are still very much in the driver's seat when it comes to market movements. And let's not forget the impact on oil prices. WTI crude rose 1% to just above $79 a barrel, which isn't surprising given the uncertainty around the Strait of Hormuz. But here's a detail I find fascinating: oil prices aren't just reacting to the news, they're also pricing in the potential for future disruptions. It's a classic case of markets trying to predict the unpredictable. Now, let's shift gears to inflation data, because this is where things get even more nuanced. Investors are eagerly awaiting the consumer and producer price index readings this week. Why? Because last week's jobs report showed an unexpected contraction, which has everyone speculating that the Fed might hold off on rate hikes. Personally, I think this is a double-edged sword. On one hand, a dovish Fed is great for stocks, hence the S&P 500 hitting an all-time high last week. But on the other hand, fewer people working raises questions about the economy's long-term growth potential. Peter Graff from Move Asset Management put it perfectly: investors should be wary of this dynamic. It's not just about the short-term gains, it's about what this means for the broader economy. And let's not forget earnings season. Companies like On Holding, Kava Group, Supermicro, and CoreWeave are reporting this week, and their results could give us a pulse on consumer and tech sectors. What makes this really interesting is that these earnings come at a time when the market is already riding high on momentum. The three major indexes just had their best weeks since April, and the S&P 500 closed at a record high. But here's the thing: can this momentum sustain? Or are we due for a pullback? In my opinion, it all depends on how these earnings reports align with inflation data and geopolitical developments. If you take a step back and think about it, the markets right now are a perfect reflection of the broader global landscape. Geopolitical tensions, economic data, and corporate earnings are all converging to create this complex, dynamic environment. What this really suggests is that we're in a period of heightened volatility, but also opportunity. For traders, it's about navigating these crosscurrents and staying nimble. For long-term investors, it's about staying focused on fundamentals and not getting too caught up in the noise. So, where does this leave us? Personally, I think the key takeaway is this: uncertainty is the only certainty right now. Whether it's the Strait of Hormuz, inflation data, or earnings reports, the markets are reacting to a constantly shifting landscape. And that's what makes this moment so fascinating. It's not just about the numbers, it's about the stories behind them and what they imply for the future. So, as we head into this week, keep an eye on these developments, but also remember to zoom out and think about the bigger picture. Because, in the end, that's where the real insights lie. What do you think? Are we in for more volatility, or will the markets find their footing? Let me know in the comments below.